Good afternoon from London, everyone, and welcome to the Sustainable Policy Institute panel discussion examining the new normal and central bank's relationship with nature. I'm Emma McGarthy, head of OMFIS Sustainable Policy Institute, and I'm joined today by Maud Abdelli, who is Initiative Lead Greening Financial Regulation and Sustainable Finance at WWF, Paolo Christach, who is Green Finance Expert at Deutsche Bundesbank, Marcus Pratt, who is Head of Sustainable Bonds and Finance at DZ Bank, and Thomas Villegas, who is Head of Capacity Building and Regulatory Engagement at the Task Force on Nature-Related Financial Disclosures. So this panel will be discussing the strategies that central banks are implementing to integrate nature into their operational frameworks. We'll be looking at the latest developments within the Task Force on Nature-Related Financial Disclosures, and we'll also be examining how to scale nature-positive capital flows to support this happening throughout the ecosystem, throughout the financial sector. So welcome to all my wonderful panelists. Thank you so much for joining me and for joining our audience today. To our audience, I do encourage you to engage and ask questions. So please do insert your name and your question into the chat box, which you should see, and I'll endeavour to put these to our panelists. So thank you again to my panelists for joining us. I'm going to dive straight in with a question which I'll pose to each of you just to set the scene and get the conversation going. Why is it important that central banks analyse nature risk? And how will this focus impact within the financial sector landscape? Paolo, you're our central banker on the panel, so maybe I can go to you first just to open up, set the scene, and then I'll go to the rest of our panelists.
Yeah, sure. First of all, thank you for having me on this panel. And well, the short answer to your question is because nature degradation could pose economic and financial risks. But let me explain in a bit more detail. So until recently, the debates and analysis of central banks chiefly centered on climate change. And climate change certainly is an existential issue on its own, but we face many other ecological crises that are equally serious. And in addition, these ecological crises are interconnected. And of course, they include climate change. The concept of planetary boundaries designates the safe operating space for humanity across dimensions like climate or biodiversity. And recent scientific evidence shows that we have already crossed 6 out of 9 planetary boundaries. And the crossing of these boundaries, that implies an increased risk of potentially devastating consequences. And it is important to note that we are not only talking about some future risks to our economy. For instance, 50 billion euros in the EU are lost every year solely due to soil degradation, according to the EU Commission. And even if you cared only about climate change, you would need to have to take biodiversity into account, because climate change and biodiversity loss are deeply interconnected and can be mutually reinforcing. So in other words, you cannot solve one issue without addressing the other. For instance, it will be difficult to achieve our net zero targets with our current deforestation policies. So based on this scientific evidence, the Network for Greening the Financial System is of the view that, nature-related risks could have significant macroeconomic and financial implications, and failure to account for them would be a source of risk for individual financial institutions, but also for financial stability. And therefore, central banks need to analyze these nature-related risks. And to do so, the NGFS established a task force on biodiversity loss and nature-related risk in 2022, with the overarching goal to help mainstream the considerations of nature-related risks within the whole NGFS. So that would be my full answer to your first question.
No, very, very good. And I think setting the scene really well, and also setting the scene on why it is important that central banks look at this. I think that's a question that we often get asked at OMFIF, where we specialise in economic and monetary policy. Why we're looking at biodiversity. I think you just outlined why it is integral that the financial sector does look at this, why central banks and policymakers do look at this. Thomas, maybe I'll go to you next as our TNFD representative. Obviously, the TNFD has probably been working quite closely with central banks. You're looking at risk, how to disclose risk. From your perspective, from the TNFD's perspective, why is it important that central banks and the financial sector understand nature risk, and how will this impact the kind of overall landscape going forward?
Great. Thank you very much, Emma. And again, to echo what Paolo said, thank you very much for this excellent opportunity and a brilliant panel. I would start by actually echoing and underscoring what Paolo said. If I try and shorten it a little bit, to the extent to which for central banks and financial supervisors, they typically have remits falling under monetary stability or price stability and financial stability. Well, as Paolo mentioned, a growing body of work makes clear that one stability underpins both, and that is planetary stability, the one stability to rule them all, in other words. And that matters hugely, as Paolo's already mentioned, from supervisory or central bank responsibilities. And from the TNFD, we're obviously, we are a market-led initiative, so we come at it from a different angle, and I'm sure the conversation will speak about the collaboration we've had with the NGFS and others, really to be able to develop that common language understanding framework, foundational understanding of the relationship between the natural world, between the real economy and our financial systems, to really be able to start on that journey of where to act and how to act. Now, the TNFD being a market-led initiative, again, I just want to underscore a couple of things. That one is the market also recognizes this being an issue. Very swiftly, I would say, in the last few years, there has been this move from seeing nature, seeing the environment as corporate social responsibility, to core risk management. That is, that what happens for our climate, what happens to our natural world, matters for organizations, for their bottom line. And so the TNFD really stemmed from this growing awareness and understanding, and as I'm sure we'll come on to, has developed a set of recommendations and guidance to help organizations act on their nature-related issues. But to go back to where I began with Paolo, I think, across the spectrum of actors in finance and business, there is now this real asserted understanding that nature matters, and it matters for everything stability-wise.
Yeah, no, thank you, Thomas. Liking the Lord of the Rings reference. Marcus, you are our market representative, so no pressure. You will be giving reflections from the market today. But yeah, again, just to kind of set the scene and from your perspective at DZ, why is it important to analyze and understand nature risk? How would this impact the financial sector? How would this impact actually the banking sector, which is where you're coming from? And any reflections on Thomas and Paolo and what they've just said?
Yeah, thank you very much, Emma. I can echo some things here already. I mean, nature risk is for me a kind of new climate change. Without nature, the human race would not come into existence, and it wouldn't continue to exist, so to say. And there will be no stable climate without a healthy nature at the end of the day. And climate change is one of the drivers of biodiversity loss, for example. And on the other hand, for example, biodiversity loss has also a negative impact on climate change. And nature loss poses a lot of serious risks to humanity and also to the economy. Think of things like food and medicines, for example. And such essential threats for the economy are also threats for the financial system, because our economy cannot exist without the nature, so to say. And there are assumptions that about half of the world's GDP is generated in industries which depends on nature and its services. And hence central banks and supervisory authorities are more and more recognizing the potential for biodiversity loss to threaten macroeconomic stability and also the stability of the financial system, so to say. And on the other hand, we also have to see that central banks are also big investors, so their portfolios are directly and indirectly more or less affected by nature-related risks at the end of the day. I mean, we are speaking here, it's very similar when we talk about central banks and climate change. We speak about three different risks. It's a physical risk, it's a transitional risk. So the whole economy needs to change. Maybe some business models will disappear. Other business models need to be grown in another way than before. And at the end of the day, it's also liability risks, what we have to say. And there are different, let's say, impacts on the economy, on the financial players. And these might lead at the end of the day to certain financial risks like credit risk, market risk, pricing risks, or liquidity risks at the end of the day.
Yeah. No, very good. And I think we'll come back to, from a practical standpoint, how the market is sort of looking at these risks, integrating these risks, and trying to understand these risks. But Maud, I'd like to come to you just to give your perspective on WWF. Obviously, you're doing a lot of work for central banks in this space. Biodiversity is, of course, a huge focus of WWF. So it would be lovely to hear from you, again, in terms of why it's important to integrate nature and analyze nature risk and the impact that this will have.
Yes, thank you very much, Emma. And yeah, I will obviously echo what my other panelists have said, but basically there is no economic activity without nature. So many industry rely on diverse ecosystem for raw materials, but also on different ecosystem services. So the central banks, they need to assess how the destruction, the degradation of biodiversity may impact the sectors that contribute to a country's economy, for example. So, for example, if you take the risk to the food system, they are affecting global food security and could potentially impact food prices. So in the long term, with nature degradation, this could affect the growth of the economy and impact both financial and price stability. And also from a transition risk perspective, policy response to tackle nature loss could also impact price stability. For example, if the government start to implement specific pricing policies, such as the pricing of externalities. But what is more important on this, why central banks should care about nature, is more that nature loss will represent a systemic risk for our global financial system. Like showed in the European Central Bank study that was recently published, 75% of the bank loans in the European region are highly dependent on at least one ecosystem services. So it really gives you the magnitude of the systemic aspect of nature-related financial risk. And another reason, and it is a reason that it is close to my heart at least, is that we know that voluntary action taken by financial institutions will never be enough to stop nature degradation and meet our common objective to restore biodiversity, right? So the fact and numbers, they are quite clear. For example, according to the last Forest and Finance report, since 2016, banks have financed for more than $300 billion of sector driving deforestation. So if we want to stop this trend, if we want to really have impactful action, we need strong regulation, and we need both governments and central bank to take impactful action and include nature conservation targets at the heart of the financial system functioning, because this will be the only way to reach impact at the pace and at global scale we need, basically.
Yeah. No, I think that's excellent, and maybe we can come back to the regulatory practices that are required and what this looks like. So I think it's an important part, and as you say, we need to move past voluntary and to kind of making this happen. But I think we just set the scene very well in terms of why this is important, the risk that it does pose, why we need to be looking at this. Paolo, I'd like to go to you now just to talk me through the conceptual framework that the NGFS has put out on nature risk. How does this support the operationalization of risk metrics, methodology, and understanding?
Yes, sure. Maybe first of all, why was it important for us to develop such a conceptual framework? I mean, assessing the risks stemming from nature loss is highly complex. I already touched upon the many interdependencies, and there are, to be honest, still many unknowns. So for us as central banks, it was important to untangle this complexity, and the conceptual framework of the NGFS is a major step in this direction. So basically, the conceptual framework makes two contributions. First, it establishes a common language on nature-related risks among central banks and supervisors. And the importance of that was already mentioned by Thomas. But for us, especially in a network as large as the NGFS, such a common understanding is crucial, because only then we can work together on solutions. And in the framework, we explain how nature degradation can create physical as well as transition risk. These are the same categories as was mentioned by our colleague from the DZ Bank. The same categories as we talk about as when we talk about climate change related risks. So, and in the conceptual framework, we explain how these physical and transition risks can transmit to the economy on a micro and macro level, and how they ultimately affect the financial system. An example for a materializing transition risk could be the EU biodiversity strategy that tightened regulation on the import of certain commodities. Or take the agricultural sector. Farmers operating on unhealthy soil might face lower crop yields and thus lower profits. And farmers might be affected directly, but you have to also take into account the indirect effects. For example, businesses in the food supply chain, they depend on the output of the farmers and could be affected indirectly. And through food prices, the effects are, of course, also relevant for households. So that's basically the first contribution of the conceptual framework, this common understanding and how the transmission channels work. And the second contribution, and here I come back to your point or your question on the operationalization. The second contribution is that the NGFS conceptual framework lays out a risk assessment framework. And this risk assessment framework consists of 3 phases. The first one lies in the identification and sources of physical and transition risk. The second one is then the assessment of the economic risk. And the third one is the assessment to and within the financial system. So for each of these phases, we offer guiding questions to help central bankers navigate the challenges that come with the assessment. So to sum up, it's a principle-based risk assessment framework. Therefore, it offers a lot of flexibility and allows for new emerging practices, but also for jurisdictional differences, which is important, especially in an NGFS context. So, yeah, thanks.
Thanks, Paolo. Yeah, some really interesting insight there. Maud, maybe I could turn to you from some reactions in terms of the work that WWF is obviously doing on biodiversity. I think we began to touch on that a little bit. But where should we be focusing our action? What are some good examples or some examples of good practice from central banks in terms of kind of integrating these risk frameworks and examples of kind of where this has worked and where it's supporting the private sector to start looking at these risks and understanding these risks?
Yes, thanks, Emma. And just want to recall that we are really happy to see that NGFS has provided this conceptual framework. It's a super important framework that we hope will incentivize a lot of central banks to integrate nature into all their core missions. And on our side, we are trying to also provide solution to do so, because it's not an easy task. We recognize it. And this is why we are really trying to provide the useful information. Starting with the assessment we are making with our SOSREC tool on central banks' practices to integrate nature. So this year we have published our 3rd assessment, and we saw a lot of emerging good practices, which is really good to see. So, for example, let me give you 2-3 examples. The French central banks, they have started to integrate biodiversity indicator in their disclosure of their own portfolios under the responsible investment strategy. They are disclosing impact indicators, for example, such as the total absolute biodiversity impact, the biodiversity footprint of their equity portfolio. On another aspect, on prudential supervision, you have the central bank in Hungary that has launched a project to assess financial risk related to nature loss and to develop financial supervisory methodology to address those risks. The Dutch National Bank, for example, they also issue very interestingly a guide for financial institutions to address deforestation risk mitigation. And we think it's also good practices, and the role of the central bank, of the financial supervisor, to guide financial institutions in their journey to integrate nature-related aspects. In Asia Pacific, the Banca Negara Malaysia, they for example, explicitly links climate and biodiversity in their climate change and principle-based taxonomy, which intend to help financial institutions, again, to categorize more the economic activities by their impact on climate and environmental objective. So this integrated approach is really good. And this includes also assessing whether an economic activity protects healthy ecosystem and biodiversity. And they also have published specific guidance for financial institutions on a number of ESG impacts to be considered by FI in assessing their clients, which include issues such as, for example, biodiversity loss and deforestation or sustainable raw materials. So those are only a few examples amongst many others. So there are a lot of different interesting initiatives so far that are emerging, and we think most of them could be implemented in other countries. So this is really good, and we hope the NGFS conceptual framework and our different reports will support this positive trend. So we are also publishing different reports to show that the integration of environmental aspects into central banking is already possible, no? Because this is what we want to showcase, that central bank can really start their journey already now and implement some specific impactful measures. So for that, we are proposing to focus on specific sector of activities that are the most detrimental for nature, and also to activate what we think are the most impactful tools in central bank toolkits. So for example, this could be to adopt a precautionary approach and to focus on the most harmful activities for nature, and to concentrate on high impact sectors such as deforestation, pesticide production, intensive farming, or fossil fuel, for example.
Yeah, brilliant. Thank you, Maud. Marcus, I'd like to come to you again from a more practical standpoint. How are you working with central banks in this, and how are banks in the wider financial sector integrating biodiversity frameworks and metrics? What are the challenges as well with beginning to look at this and to actually implement it and do this?
Okay, thanks, Emma. I mean, first of all, we are working very closely with the financial sector, because at the end of the day, it's both that public and private capital need to be raised to solve the sustainability challenges. And this includes things like biodiversity or nature positive business models at the end of the day. And especially, you know, we are the financial sector. We are lending, but also investing to a lot of high impact and high dependency sectors. And on the other hand, we also have the market power as a house to help directing capital flows into, let's say, the right project, so nature positive activities at the end of the day. And there is a lot of reasons for the financial sector to cope with this. I mean, there is competitive pressure, there's also regulatory pressure, you know, with all this increasing sustainable finance regulation coming into play. There are more and more also investors and shareholders requesting a look at nature related issues. And at the end of the day, we already talked about risks, and we heard from Maud, for example, that a lot of loans go to companies who are heavily relying on ecosystem services. And on the other hand, it's also a lot of companies which are highly dependent on this ecosystem services. And so at the end of the day, this leads to certain financial and market and reputational risks we are facing. But on the other hand, I mean, we also have to see not only the risk perspective, but also the business opportunity perspective. And there is a huge financing gap for biodiversity. There are different estimates, but it's around 700 to 800 billion US dollar a year, and here we need the financial sector to be a major part on it. And how does it work? I mean, we have to look at portfolios from two ways. On the one hand, how is a portfolio more or less affecting biodiversity and nature related issues, and on the other hand, how is the loss of biodiversity affecting our portfolio? And then we really have to, let's say, change the bad players against good players. So investing in companies, in corporates who have a nature related positive impact at the end of the day. And this is very much often also associated with other impact analysis. For example, in addition, you do a SDG impact analysis and so on. But of course, the big challenge maybe compared to, let's say, pure climate related analysis is that nature related topics are much more diverse at the end of the day. Yeah? So you have a lot more KPIs you need to consider. Data availability is sometimes very tricky and challenging. And then, of course, biodiversity related impact depends also a little bit on the sectors or on the part of the world where you're assessing those risks. Yeah. And hence, yeah, we need different guidance. Yeah. For example, one thing I would like to mention is a principles for responsible banking nature target setting guidance, which was very helpful for lending activities or capital market activities, for example. And it's very important that you look at the exposure to sectors, but also the exposure to certain companies at the end of the day. And when we talk with investors, so how do investors integrate nature-related topics into their investments? They very often start to develop a strategy or with an existing ESG strategy to put a little bit more emphasis on nature-related and biodiversity KPIs. Then they have, of course, overcome this challenge of data quality and availability, and then they are setting some nature-related targets at the end of the day and integrate this into their, let's call it ESG assessment. And at the end of the day, the aim is to reduce the portfolio of harmful activities. So you do in divestment, and on the other hand, you also look at the opportunities. Where are certain investments which help to get biodiversity net gains at the end of the day? And then this is the way we deal with investors, but also with the broader financial sector at the moment.
Yeah, I guess a question I have as well is, once you've identified the kind of the risks and maybe the kind of elements of the portfolio where it is a risk, what do you then do with that portfolio? Is this something that you started looking at and considering? Like, do you divest? Do you then kind of work with its entities to support transitioning into sort of more kind of sustainable methods? What are your thoughts there?
It's a little bit, this I would call it transform instead of divest a little bit. I mean, in the past, very much divestment strategies were approached. Nowadays, you enter in an active engagement dialogue with the respective portfolio companies. So to see are there possibilities to remain on a, let's say, credible transition path, and as long as this holds true, you start to further support these players in the market. But of course, if there is a certain point where you say the risk is much bigger than the opportunities, and we could not go, let's say, the credible path, then of course you start to divest.
Yeah, no, very good. I think this sort of ties in a little bit to Catherine's question, and Thomas, I'd like to come to you next regarding what the TNFD is doing in this space. Obviously, you released its final set of disclosure, or the TNFD released its final set of disclosure recommendations in September. What are these recommendations? How can these recommendations guide the identification, assessment, and management of nature-related risk? And tying into Catherine's question, I realize there's probably a lot of questions within this, but I think it's a good one. How does this disclosure lead to nature positive outcomes, which is obviously what the TNFD is looking at and trying to support?
Sure. Thanks, Emma, and thanks. A great set of questions. So to kind of build on what's been said and to take that step back. So, from recognizing that nature matters for our economies, matters for financial systems, matters for the bottom line. That is what stemmed, that really was behind the origination of the TNFD. So the Task Force on Nature-Related Financial Disclosures is a market-led initiative to be able to, with the aim to produce a set of disclosure recommendations and guidance to help every single organization, wherever they are in the world, to be able to report and act on their evolving nature-related issues, that being their dependencies, impacts, risks, and opportunities. As you mentioned, Emma, last September, we published our final set of recommendations and guidance, 14 recommended disclosures across 4 pillars, very much similar to as the TCFD. And why ultimately, and I think that was the question you were getting at, is how can that have an impact? Well, first and foremost, to be able to act, you need to understand, and to understand, you need the information. So organizations need to be able to understand for themselves what are their nature-related issues. I think as a bit has been touched on, such as through Marcus, where are their dependencies and impacts, either indirectly, if they're a financial institution, or if they're a real economy, if they're a business, where are they in their supply chains and their operations? Now that might seem like a really easy question. You first need to understand and be able to start to measure and manage. But to be able to do any of that, and to go back to what Paolo said from a central banking point of view, you need to have a conceptual framework. You need to have a basic understanding of the architecture to be able to get going, to be able to speak to your stakeholders. If you're a financial institution or investor, if you want to speak to your investee, you want to be speaking using the same language and lexicon when you're talking about these issues to really be able to support understanding and action. So the TNFD recommendations provide that through doing that. Now, there was also on your question about nature positive. There's a lot of buzzwords in the nature space, and I think it's fair to say in recent years, nature positive has been a big one where it hasn't had a defined definition. That has changed, and that's changed rapidly. The TNFD, with many other organizations, include WWF, are part of a nature positive initiative to provide that robust, reliable conceptual or that definition on nature positive, particularly I won't go into all the detail, but at its core it means measuring impact, so improving the state of nature. So we're looking through it from a purely impact lens, and the TNFD recommendations can help an organization do that, again, as I said, through building their understanding, their awareness, their identification of their nature related issues. And to get your to build on the question that you asked Marcus, Emma, once an organization does that, it can then act, it can then build its response. It can then work with other organizations, or it can tune or fine-tune its activities or its operations to help ensure that it has more positive impact on the aspect of nature. And again, you can go into it further through the questions, but as part of the TNFD recommendations, there are a core set of metrics that have been provided, again, to be able to provide that direction across the market space on what should be measured to help manage and therefore move towards a nature positive state of the world.
Yeah, no, thank you, Thomas. We started talking a lot about kind of data and assessments and getting the right information, and this is highlighted and has been highlighted in over the last couple of years in pretty much every conversation I've had about biodiversity, as it's very hard to understand, very hard to get the data. I'll go to you first, Paolo, and then I'm sure Maud, you will have reflections on this as well. But how are we driving better understanding, better data, better information? And I think this can tie into a question on stress testing and scenario analysis exercises that you're doing, which will help kind of get better understanding and provide better information on the nature risks that we're seeing. So maybe I can go to you first, Paolo, to reflect on that and the developments of the stress testing and scenario analysis tools which reflect those.
Yes, certainly a very relevant question. And when it comes to scenarios, a milestone was certainly the publication of the NGFS recommendations on how to develop nature scenarios, which we published last December. And the goal and main contribution of this technical report is really to move from our concepts and theory to practice. While the conceptual framework offers flexibility, it does not really offer much concrete guidance. And with our report on nature scenarios, we really started to translate the conceptual framework into practical steps forward. So we explore the scenarios in 2 steps, and these 2 steps relate to phase 1 and phase 2 of the risk assessment from the conceptual framework. So the first step is to develop a scenario narrative. And there we address the questions: what are the sources of risks? Or in simpler words, which story do we tell? Where could these risks emerge? And should we focus on broad or local risks? What we call in this technical document the global-local trade-off is a very important aspect, because the more aggregated the scenario, of course, the more convenient. If we had only one metric that aggregates all the information, this would be simple, but we would miss everything at the local level that matters at the local level. And I think we all agree that there is no single metric when it comes to nature. So, but on the other hand, if we develop local scenarios or use only local case studies, which is certainly one way forward and is important to raise awareness, but we have to be aware that we also miss the macro financial effects of it. So in our technical report, we do not solve all the questions, but we show that there are already tools out there that can be used today to address these questions. That's basically the first step. And the second step in our publication is how we then estimate the economic impact that would result from a certain scenario. From a certain narrative. A narrative describes a shock, like the collapse of the Amazon rainforest due to deforestation. And then we have certain outputs of this narrative, which we plug then into our economic models. And we review 6 nature economy modeling frameworks and assess their ability, if they are able first to integrate the output of the narratives, and then how do these models account for the transmission channels to the economy. And overall, we find that the models only represent a subsection of physical and transition risks that are relevant. And additionally, the models tend to strongly underestimate the potential magnitude of the economic consequences. So you asked for ways forward. What are ways forward in the short term? Well, we show that we can already use some of these models, but we have to be transparent when it comes to the modeling assumptions and how they are responsible for certain results and how they might lead to underestimation. In the long run, of course, we need researchers to refine our models so that they are able to take into account more of the relevant physical and transition risk we face. So we are assessing the economic risks, and there are models out there. So I really would like to echo what Mort said, that we can start the journey today. Sure, we have to be aware of the limitations, but we show in this report, and I all encourage you to take a look at it, that there are tools and data already available to assess these risks.
Yeah, well, maybe I can go to you for your reflections on this, and maybe what more can be done to capture these risks, to improve these models, to get better understanding. I know this is something that WWF are looking at with their Sustainable Financial Regulations activities tracker as well. But yeah, would love to hear your thoughts and reflections on this.
Yes, thanks, Emma. And yeah, we agree that scenario analysis, economic model, and stress testing are important, obviously. But in our view, obviously, they should not be the only tool to assess nature-related risk. The reason is because they will never embed all the dimension of nature-related risks, such as tipping point or indirect impact of the loss of one ecosystem could have on another ecosystem, for example. Those are things that are super difficult to measure. So this is why scenario, stress test, economic models, they should be completed by expert judgment and qualitative assessment in our view. And here again, it is important to focus on the most detrimental sector for nature conservation first, and to make sure that we are having that we are managing to diminish the activity in those sectors, for example. So in face of the underestimation of the risk, when we use economic models, we think that a degree of expert judgment and a degree of precaution simply is the best answer, no? So it really engaging those companies that are having detrimental activities, but also always acting as a precautionary or agent, let's call it that way, and adding a precautionary caution in front of each risk related to nature, even if it is not very well calculated or calibrated.
Yeah, I think you started to ask this question already, both Maud and Paolo, but I think it's relevant still, and maybe we can build on what you've just said. A question from the audience on the tools, the financial regulations and central banking you're seeing to support the integration of nature, and which tools do you think we need less? Who would like to take that? Paolo or Maud? What?
I think, yeah, go ahead.
No, it's an interesting question. Which tools should we use less? Because in the report we really dive into which tools can we use, what are ways forward. I think they're not. We currently don't have the situation where there are a lot of tools which are great that we can use. So it's a difficult question to answer, but I would like to come back to a point more made, that there will never be a model that takes into account all these interconnections to assess biodiversity loss properly. And I fully agree with that. But more also, you said, you mentioned the indirect impacts. And indeed, one whole chapter of our report is dedicated to models and how to model the indirect impacts. And we come to the conclusion that these indirect impacts are very important, and that there are already models out there that can be used, like, for example, multi-regional input-output models, which basically trace the origin of certain input factors across supply chains. So especially on indirect impacts, there are tools that we can already use. I just wanted to highlight that, while I agree with Maud's point.
Yeah, no, thank you. Very, very good. We've also had a question which I'll post to Thomas on how the TNFD is working with central banks. Could you elaborate a little bit, and maybe also how you're supporting this understanding of the risk that we have and the implications that it has, and yeah, how you're working with central banks?
Sure, thanks. A really good question. As I think I mentioned, but to kind of underscore, we work very closely with the NGFS as part of our design phase. So the NGFS have and continue to be one of our key 20 core knowledge partners. And by knowledge partners, just to delve a little bit deeper, the TNFD, the recommendations, the conceptual foundations that underpin those recommendations really are a culmination of collective collaboration, as it were, with those knowledge partners, building on what's out there, trying to support, facilitate shared understanding. And with the NGFS, with the conceptual framework, as Paolo mentioned, with the technical document on scenarios, has really been working together to be able to provide that common understanding with us as a market-led task force and the NGFS as a group of central banks and supervisors. So we've worked closely. We will continue to work closely again to build and push on that technical frontier on those nature-related issues. If just one other thing to add, I think building on the question before, and I think a point to also mention, in addition to the tools, and was your question, Emma, about data. Yeah. Naturally, as the TNFD, we are heavily focused on data and how to be able to increase access to decision-useful data. I want to underscore those two words, because we live in a world of bountiful data. But for supervisors, for financial institutions, for businesses, that data has to be decision useful ultimately to matter. And I think when we also talk about, as Paolo said, with nature-related risks, given the nature of nature, mind the pun, is extremely localized in some cases. For regulators, for supervisors that are concerned with domestic risk, that is risk to their domestic financial systems, naturally it lends the question of domestic firms that operate via supply chains or finance activities in other biomes or other areas across the world. What's happening there matters at home, but there's obviously potential limitations on how much information or access you can get. So something that the TNFD, working with partners, has put out last year was this concept, or this idea for a global public data facility. So something bringing together a range of actors to be able to provide a platform for shared data. And that's also something the TNFD will be working on and have said they will be working on to further build out that over the course of this year too.
Very good. And while I'm on you, actually, I'll ask a question of how the adoption of a task force recommendations can support a shift in financial flows towards nature positive outcomes. What do you see there, Thomas?
Sure. Well, great timing for the question as well, as last week at the World Economic Forum in Davos, the TNFD unveiled its cohort of early adopters. Those are organizations that have stated or committed their intent to disclose along the lines of the TNFD recommendations on financial year 24 or 25. We had 320 organizations, and those spanned, in terms of headquarters, 46 countries. So I mentioned up front we were a global initiative, and now we're seeing global action in terms of adopting those recommendations. And your question about how can that support that shift in financial flows? Well, as I mentioned a little bit about what the TNFD and its recommendations covers through dependency, impact, and risk in particular. For those of us who are familiar with the global biodiversity framework that was agreed in Canada only about 2 years ago by 200 governments, target 15 out of those 23 targets specifically called for disclosure of nature-related dependencies, impacts, and risks to be able to support the overarching goals of the global biodiversity framework to improve, to reverse nature loss and put it on a sustainable path forward. So again, the TNFD explicitly caters to that ability for organizations to align themselves with the global biodiversity framework through Target 15 and thereby support nature positive outcomes through working and disclosing in line with the recommendations.
Thank you. No, very good. Marcus, obviously, again, being the market leader in this conversation, what do you think is the role of the private sector in supporting the scale up of nature positive financial flows? What's your perspective on the TNFD and kind of what the TNFD is doing and the expectations on the private sector? Over to you.
I mean, what we expect from all these initiatives is to bring a little bit more flow into this discussion and also helping to, how to structure respective instruments for the market. Yeah, let's take the sustainable bond market, for example, as one example. In the sustainable bond market, so far, things like biodiversity were still a very small but shiny light, I would like to call it. Yeah, and through initiatives like this, we expect that nature-related risk will move up further on the agenda, for example, of sustainable bond issuers, but also from investors. Yeah, because we have seen that environmental challenges or environmental sustainability is just more than climate change. Yeah? And here it's very easily to bring in, let's say, SDGs like SDG 15, life on land, or SDG 14, life below water, into the focus of sustainable finance. Yeah, and once we have the respective metrics, yeah, I mean, as we said, data availability is a big challenge, and but once we have defined KPIs, for example, yeah, we can easily use it in tools which are already available on the market. Like think of target link structures, for example. If we have really credible and material KPIs and we can underline them with ambitious targets, yeah, it's very easily to include nature-related risk or nature-related topics into SLBs, for example. I mean, we have one example on the market, Uruguay, yeah, which next to the climate change target, they also had a target on forestry into the first sustainability linked bond. So this is all, let's say, a driver for new instruments or to integrate nature-related topics into existing instruments. I mean, we don't have to reinvent the wheel at the end of the day.
Yeah, no, I think that's a very good remark and good point. We've had a couple of other questions from the audience, which I'll pose. So one person is asking, are there already lessons learned on the integration of nature in central bank and financial supervisors tools? More, maybe I can go to you for this. Obviously, WWF has been assessing this. As I mentioned, you have a tracker. We also do have a colleague on the line who can answer any questions on that tracker, but maybe I'll go to you first of all.
Yeah, sure. Thank you for the question, Emma. Yeah, so the first lesson learned is obviously that central bank and financial supervisors are making a lot of progress on that front, which is really encouraging. So as I told you before, we have seen a different range of practices, different use of tools by central bankers and financial supervisor. And coming back to your question on the tools, which tool central bank can use, Emma, I don't think that there is a determined list of tools, but it is a combination question of tools within prudential supervision, tools within monetary policy implementation, in my view. And depending on the mandate of the central bank in the country, depending on the toolkit they have, they can activate one or another or both kind of tool, being in prudential supervision or monetary policy implementation, of course. And yeah, maybe Citi, you want to step in on the result of our assessment.
Yeah, thank you so much. Thank you so much. Yeah, just to add on to what Mott has said, indeed there are some, encouraging good practices that we've seen in the last year, but the trend itself, we still see that nature-related risk is still far behind climate for a lot of reasons, and this is like for practical reasons, as I think has been discussed today. And what we understand is that nature-related risk is highly site-specific, and this is one of the reasons why it is challenging for financial institutions and even corporates to really, understand their impacts and do the mitigative action that they need to do. And I think it's also worth mentioning that WWF last year has recently launched the biodiversity risk filter. The tool itself is not intended for central banks, but it can be used for financial sector in terms of making prioritization of which location and which subsectors that they need to prioritize in terms of action. It's not exactly footprinting tools, but it can be a starting point for that. Thank you.
Really appreciate it. Paolo, do you have anything to add to this from a central banking perspective? And there's also been a question on the main capacity building initiatives which are available to central banks by the TNFD. Maybe first we can go to you for that, but then actually Thomas, I think you would be very good to input on this as well.
So yeah, in terms of lessons learned, well, the key lesson I think is that there are already practical tools out there that can be used, and we highlight some that are fairly easy to use in our report. Another lesson is that case studies, while they underestimate and do not take into account all the risks that are not necessarily relevant, they can shed some light on this. So it does help. And what we do in the upcoming month, we will refine our conceptual frameworks, and we will integrate some illustrative case studies and show how to apply the conceptual frameworks without diving into too much detail with models and tools. So, and the other question was in regard to capacity building. Well, that's very important at the NGFS when we have an own group that is dedicated to that. Of course, we focus still a lot on climate-related risks, but when I look at my own institution at Bundesbank, there are certainly more people that gaining interest in the topic of biodiversity, and that's what we do internally. We build capacity.
Yeah, thank you. Thomas, anything to add to that?
I think yeah, sure. Just two things. The TNFD, as I mentioned, as being market-led, market-focused, the TNFD will be having a big focus on building out market capacities, of building capacity within organizations, both businesses and financial institutions across the world, to ensure that they can move through a keenness to act to the ability to act on nature and on the TNFD recommendations. And separate to that, but importantly, as Paolo mentioned, given the NGFS's capacity building task force and its planned work as well there, we look forward to be able to contribute and collaborate to be able to support, again, that really basic baseline understanding of nature-related issues. Again, as Paolo has mentioned before, given the conceptual framework that the group has put, and given that our recommendations and the conceptual foundations of those, there's a very high degree of consistency, and working together, again, being able to provide and support that shared understanding among the financial community.
Yeah, no, very good. We've had another question. I think we kind of touched upon this a little bit earlier, but I think we can maybe go a little bit more into it. A question from Catherine, who was asking, we hear a lot about nature positive decision making, but how does disclosure without action lead to nature positive outcomes? And I think to add to that, and which again I posed to Marcus a little bit earlier, but I think we can go a bit more into it. If you're disclosing what do you then do? You've disclosed, you've discovered what the risks are, what the problems are. What's any expectation? How do you act? How should the financial sector act? And I'll open this to the floor, to the panelists who would like to give this a go. Marcus, you did unmute yourself, so maybe.
Yeah, maybe. I mean, as you said, well, once you've disclosed, it's time to turn ambition into action, more or less, to say. So after the disclosure, yeah, it's really time to act. Yeah. So transition your portfolios in a more positive way to a more nature-related positive outcome at the end of the day. Maybe, as I said, starting an active engagement with critical investments. Then, of course, if you see it leads to the wrong way, then divesting is definitely one thing. But I would not, as I said, I would not always look at the risk opportunity, but also from the opportunity point of view. So you have identify really the candidates who help to let's say to contribute to more biodiversity at the end of the day, to more positive nature related outcome, and that's the way how you start. Yeah.
Yeah, Thomas, anything to add to that from TNFB?
Yeah, I mean, very much consistent building what Marcus said. I mean, disclosure gives you the baseline. It gives you that understanding at time t equals 0. What is your impact now on different aspects of nature that you interact in? And then if you want to transition, how are you going to transition? So where are you starting from? And I think, as Marcus mentioned, there's many different avenues or ways in which a business or financial institution can act. But ultimately, business and financial institutions, they will do what they do best. That is, they have the problem. They will be able to work through their ingenuity, through investment, through their productivity, through their ability to then be able to translate that into new activities, new actions, new financed opportunities, or working with existing investees, or working through what you do already, to be able to support outputs that lead to nature positive outcomes. So very much it's, disclosure will give that foundational understanding to be able to allow organizations to act.
Yeah. We're running out of time, so I'll pose one more question from the audience, and then I'll go for a quick wrap-up final remarks. Again, quite a challenging question, but I think a good personal one. Bottom line, return to profit almost always depend on sales and consumption, which depends on nature extraction. So how does nature positive improve profit and improve growth? Should it do that? Again, I'll put this I'll open this to the panel, whoever wants to try and tackle this as a final question.
I can come in a little bit. I'll get slightly on a tangent, but I promise I'll get towards the question. I think,
sure.
This is, if I boil down that question, it's, translating monetary value or profit or price with values, that is, sustainability, that is preserving the natural world, that is mitigating temperatures. The way that you can translate values into value, there's many ways. I think, as we see, if I just look at the climate change example, carbon pricing is exactly one way to do that, to try and make sure that the market price of carbon is equivalent to the kind of social price of carbon. And I know there's a number of initiatives globally to try and get that there. And again, that's an ability through where the values which we as a society, we as a world, mentioned the global biodiversity framework, we've agreed on what our North Stars are, and to be able to translate that through market mechanisms is then through being able to translate the values into value. And again, disclosure is one tool. It's not the tool. It's not a silver bullet to do that, to be able to improve the understanding. But I think, as this conversation has shown, there's many different actors, many different actions as well that need to be able to support that translation of values to value.
Yeah, no, very good. Marcus, any reflections on this, and maybe final remarks?
Yeah, maybe from a portfolio perspective. I mean, if you have a nature positive outcome, you have a kind of environmental yield, so to say, and this environmental yield in the long term, and this is a difference between classical investing and sustainable investing, more or less, to say this environmental yield in the long term translates into economic yield. Yeah, so by doing something good, you really can earn money in the long term, so to say, because we always have to consider one thing. We're talking about sustainable investing, and investing is always, looking at a certain kind of yield. Yeah.
Yeah, no, very good. Maud, over to you, and for final remarks as well.
Yeah, thank you very much. Well, as final remark, I will reiterate that we are pleased to see the progress being made by some central banks and financial supervisors, but so far, yeah, there is still a long way to go. So we expect now that individually central banks and financial supervisors, they will start to integrate nature loss alongside climate, so really implementing an integrated approach, and that they will exploit every avenue for action available, going beyond classical risk management, maybe to impact management in order to avert to the worst case scenarios outcome. And we also expect that beyond individual and local implementation, well, international standard setters, international financial forums will follow the same path and come up with minimum requirements to manage nature-related risk and impact as well, because we need convergence and we need coordination on this topic as well. Yeah.
Thank you. Paolo, over to you. Final remarks and reflections.
Yes, I would echo what Thomas said. I think there will be no silver bullet or no one size fits all, but in the GFS and for central banks, we offer basically two different approaches. Either you can use the very flexible conceptual framework approach with our risk assessment in this document, or you can use the models and tools that are already out there with the disclaimers we mentioned in our technical document.
Thank you. Thank you ever so much, panel. Thomas, did you have any very quick final reflections from your side as well?
No, I think if I had to be very short, I think just as this conversation panel's underscored is, you know, collectively there's a lot of work going on, also in collaboration to have coordinated action. And I think, you know, there's a lot being done and a lot to go, a long way to go still.
Yeah, exactly that. Thank you very much. And yeah, we will be continuing this conversation throughout 2024. Obviously, we have COP16 this year. So please, to our audience, do keep an eye on SBI updates in terms of different events that we'll be doing on biodiversity, different pieces of commentaries and journals. Please do join our discussions there. Thank you so much to our panelists for joining me today. Thank you to our audience for your questions. Have a lovely day and hopefully see you again soon to continue this conversation. Thank you all.